Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Tuesday, the 20th of June. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to go ahead and bring up a high-risk investment warning. I'll keep this discreet for a few moments. Good morning, Matthijs. A pleasure to have you on our webinar. Thank you, everyone, for signing in this morning. It is highly appreciated. Just going to bring up our commentaries disclaimer now. All right, and our references MarketScope 2.0 and TradingView.com. I want to go back to TradingView. I want to relook at the yield, I beg your pardon, the spread between the British 2-year yield and the US 2-year yield. You can see it moving in that northeasterly direction. Underneath that, we've got cable. So here's pound US dollar moving in that northeasterly direction. So there is a clear relationship. In fact, what we can do is we can go through to our indicators and let's bring up a correlation coefficient. All right, and I'm just going to make it GBP USD, and let's just take a look and see what the correlation coefficient is, and it's a very strong 84%. So pound dollar really responding to this spread, and the reason that we're talking about it is because there is going to be a Bank of England meeting this Thursday, where the official cash rate is probably going to be hiked by 25 basis points to, I believe, 4.75%. And another thing to watch when it comes to monetary policy between the US and the UK, watch this. This is very, very interesting. So I think we've made the point here that the spread is related to pound US dollar, or shall we say pound US dollar related to the spread. And what we want to take a look at now is the core inflation rates of the two. So we've got the core inflation rate of the US on the right. Let me just put the core inflation rate of the UK in as well. Okay, let's just make this year to date. All right, so take a look at the two trajectories. The UK trajectory for core inflation is going in completely the wrong direction. It's moving northeast, right? Take a look at the core inflation of the US. It's moving southeast, moving down. So the Bank of England is in a battle here, a very tough battle, and I'm not sure when it's going to stop raising their rates. So the fact of the matter is, pound US dollar, I think, is something that we've got to consider on our watch list. And when we took a look at it yesterday on MarketScope, we pointed out that it was overbought on the daily. So there was a clear uptrend that had been charted as of last week on the weekly, higher trough, higher peak, very good looking weekly RSI, but when it came down to the daily, it was overbought. That overbought condition looks to have started correcting. It's under 80 now. So that to me now becomes very, very interesting. Hey Howard, good morning to you. Nice to have you on the webinar as always. And what is interesting to me here is the corrective move. Remember that we know that prices don't move in a straight line. They are going to zig and zag. So we're now looking for the correction, and we want to see if there is some sort of opportunity to take advantage of the correction down. So uptrend, we've got a relationship, a correlation between the pound, US dollar, and the respective spreads on the 2 years. We've got some red coming in what looks like strength. Why do we call this strength? Because it's sitting in zone 1, in the upper red, the upper blue, okay? And let's go down to the hourly and see what kind of timing signals we're getting on the hourly. All right, so we didn't quite get the crossover yesterday. No surprise, because the overbought condition was effectively normalizing. We've pulled back all the way now to the S1 level. Let's keep an eye on that. Okay, so let's just draw in our support, just round about there. Okay, perhaps a little higher up. So we're kind of at our support level. Support 1, support 2, and now we're at support 3. We've got a pullback to the S1 level. The last 2 candlesticks, so this is an hourly, are spinning tops. So a little bit of uncertainty coming in. I would suggest perhaps uncertainty from the bearish side, because we have had some pressure to the downside, right? I wonder if we get a bullish cross here. I wonder if we get a bullish cross here. And if we get the 2 bullish crosses, then we start monitoring the momentum. And we want to see if we can move into that upper quintile. So again, this is one that's on the watch list. We didn't quite get the traction that we needed yesterday, but certainly something that is still of interest. And these pullbacks to support I find quite compelling. So kind of take a look here. There's the resistance turn support. As this comes down, we kind of expect some sort of reaction that I'm not sure if we'll get it or not. That's why we don't predict. Okay, we monitor and we react. Let's just take a look at the US dollar, see what the US dollar has to do on the other side for this to make sense, right? So we need, if we're going to see strength in pound US dollar, we would probably need to see some sort of weakness coming in on the US dollar side. Let's take a look, see what's happening on the US dollar side. Okay. Now, this is a very tricky, in my estimate, it's a very tricky chart, because we're not trending here. We're consolidating sideways. So we've got this symmetrical triangle. Look how the lower boundary is actually held. Isn't that interesting? And in fact, what we can do is we can potentially, I don't know if this is going to work out or not, but we can put in a higher trough question mark here. If the pound is going to cooperate, if we're going to get some sort of cooperation, well, we need some cooperation from the dollar as well. The dollar should pressure to the downside. I do see that the RSI has dipped below 50, so there is some sort of pressure to the downside. It's now challenging the lower boundary on the symmetrical triangle. Let's go down to the daily, see what's happening on the daily chart there. Okay, now we're in zone 3. Okay, zone 3, lower blue, lower red, and we are also pushing below 50 on the RSI. So pushing below 50 on the RSI, zone 3, and we've got some blue that is starting to show. Well, that's exciting. Why is that exciting? Because we've got a downtrend Okay, we've got a downtrend. Let me draw that better. We've got a downtrend, and now what we want to do is we want to see if we can exploit the rallies in the downtrend. It's not. I've got to be careful when I say a downtrend. It's not on the primary trend basis. It's on a secondary trend basis. What I mean by that, well, the downtrend is on the daily. It's not on the weekly. It would be stronger if it was on the weekly, but we've got some sort of downward pressure on the daily. We've got some blue, and the idea here is, of course, well, if there is some blue, let's change this to blue. Not that. Here, let's make that blue. So we've got some blue, and we want to see if we can exploit that blue. Try get in on the rally. So what we're going to do is we're going to go down to the hourly chart here and see what kind of timing signal we get on the hourly. Looking for the two triggers plus the momentum. And we didn't get the crossovers yesterday. Potentially in play today. How come? Well, we have got a thick band of resistance here between the R1, R2. So these two pivots are interacting with one another. And take a look at the stochastic. Stochastic is pushing down. Okay, so we want the crossover on the stochastic. We want the crossover on the EMAs as well. So the exponential moving averages and the stochastic, some sort of bearish crossover. If we get those two triggers, it doesn't guarantee the swing. What guarantees this? What guarantees going to be a strong word. What we would probably need is we would need the stochastic to push into that lower quintile. Take a look what kind of pattern we're getting here. 1, 2, 2, 3. So here's that rally in the downtrend. Are we going to get the next movement to the downside? Question mark. Okay, let's just put in a fib here as well. So it's a 62% retracement. So this R2 level is looking quite interesting. All right, so if we get some sort of bearish crossovers here, pound US dollars on the watch list, okay, do we get some sort of support that kicks in over here as well? Okay, we need the stochastic, need the EMAs to start showing some sort of cooperation. We don't quite have that yet, so it's a game of patience at the moment. It's a game of patience. All right, let's take a look at a few others. Let's take a look at euro. Okay. So euro charted that higher trough last week, and we've got this series of higher troughs followed by higher peaks. Take a look at that RSI. It's now popped back above 50, and I actually think that it's worthwhile moving it across. So there perhaps a little bit of an anomaly. What do I mean by anomaly? Just sort of this dip over here, but by and large, it's been moving above 50, between 50 and 80. So we've got the upwards momentum there. Take a look at the 30-week moving average. 30-week moving average also traveling in that northeasterly direction, acting as a nice support for the candlesticks, and the candlesticks are above the 30-week moving average. If we go down to the daily chart, okay, we are in zone 1. We've got a nice expansion in the Bollingers. We've got the RSI that's nicely above 50, and again, we've got the little bit of corrective movement coming in. But if there's some of that corrective movement coming in, okay, then we can take a look at our hourly chart, see if we can get some sort of cooperation on the hourly chart. The hourly chart is actually looking very interesting. There is a line of support. It's line of support. You've got the potential of a golden cross on the EMAs. The stochastic starting to push up. So this is another one that's very interesting, one to potentially keep an eye on, add it to the watch list. Do we get the stochastic moving through to the upper quintile and holding? And if we get that momentum kick in, okay, and if we see the greenback coming down, keep an eye on euro US dollar. Mateus just writing here, I see all the Japanese yen pairs lose value. Is this a deliberate action by Japan? So there is interference by the Bank of Japan. They are doing yield curve control, and because of that, the Japanese yen is not one that I look at too often, Mateus, because I don't think it's a fair playing field. So it's not one that we look at all that often. I can bring it up just to see what the technicals are saying, but the technicals are going to be crippled to some extent because of interference. Okay, so the last time we looked at it, it looked as if there was some sort of potential head and shoulders. That never completed. You can take this out. That analysis is gone. So in terms of US dollar Japanese yen, the candlesticks are above the 30-week moving average. The 30-week moving average is moving in that northeasterly direction. The RSI nicely above 50, and you can see that we are in zone 1. Something just to point out here straight away is watch out, we're overbought. Okay, we're overbought, but how does the yield curve control interplay with this overbought condition? That's going to be interesting there, Mateus. I don't have an answer for that. So there is a bullish looking daily chart, but I think that just like the pound US dollar was overbought yesterday, one has to be cautious. One has to be cautious on a number of levels here, on the technical level and on the fundamental Bank of Japan interference level, right? So you can see that there's certainly, I would suggest, a deliberate action by the Bank of Japan, which is influencing Japanese yen pairs. So I think you're quite right there. All right, let's just take a look at DAX now. All right, this is interesting. This to me is a particularly interesting chart because it's effectively a study of technical theory going on here. And that theory or the study revolves around what's happening with this trend line interplay. Is the trend line going to hold or fold? If it folds, then we don't have a valid trend line here anymore. And we don't have even a tentative trend line yet. It's breaking down. So there is a pullback taking place on the DAX at the moment. We do see the higher trough, higher peak, higher trough, higher peak. We do see the RSI moving above 50. It is certainly an uptrend with quite severe pullback at the moment. Let's just take a look at the daily chart. And you can see that it's now on the border between zone 1 and zone 2. So this movement into zone 1 doesn't look as if it's been as successful as I would have liked. The DAX actually pulling back quite severely over the last 2 days. And what I would do here, given the fact that we've got this uptrend, given the fact that we're on a trend line, given the fact that we're just on the border here, I will still look for support. We've got quite a deep pullback here. Got a deep pullback to the S2 level. And let's just see what kind of support we get here. I mean, there's a little bit of overplay. little bit of overplay. I would suggest that the S2 level perhaps is the overriding support play at the moment. And in terms of pullback, we've actually pulled back a fair amount, 62% pullback here. I would keep a lookout on this S2. I'd be very careful. The EMAs are in heavy bearish mode, and the stochastic is in that low quintile. There's a lot of weakness here. What would be interesting is if the S2 held and we got some sort of crossovers. But at the moment, this chart seems to be less compelling to me than the others on the watch list because of the just the angle and separation of the exponential moving averages. All right, I think that's where we'll leave it for this morning. If there's any questions, please go ahead and type those in. Any questions, type those in. Tomorrow is Wednesday, so we will do the morning market review, and we will do a crypto minute tomorrow. I don't see any questions coming in, so let us wrap up here, guys. Have a good day ahead and a good evening. Speak to you tomorrow. Cheers, Anna. You have a great day yourself.